This is London with MarketHedge. Let's pay attention to Bitcoin and the chart. This is London, former hedge fund owner, private, non-SEC, not financial advice. You saw me take here yesterday. It was a precautionary conservative measure in terms of the target to the downside. Remember, it's that descending wedge. Anytime that we get a descending wedge to perform to the downside, right? When the expectation is a move to the upside, anytime that we're below the level of support, we like to target in, stack in, hedge in, and aim for this apex. So look at yesterday's video. If you didn't catch it, it goes through the aggressive versus the conservative take, which we took yesterday. And I informed you guys that I might go in and hedge a bit more, which I did after that take, hedged in, created some additional profits. It's a nice day in terms of the trading. Let's dig into the technicals very quickly in terms of the MACD, in terms of the RSI. Where are we? We're going to start at the 4 hourly. First of all, we're over the 20 moving average. Nice, I'd say, potential constriction here is we would spend additional time along that 20 moving average. That 20 moving average on the 4 hourly is going to continue to be a target. Period. Okay, it is for traders who are going to be hedging the 20 moving average. That's just it. You guys pay quite a bit of attention to the hedges in that 20 moving average. We're going to look at the MACD. Right, MACD has rolled green, which is nice. We were red for quite a bit of time on the 4 hourly histogram, so it's nice to see that yes, indeed, we have rolled green. Now the job is going to be for the bulls to try and maintain histogram on MACD. Bitcoin to be, let's just say, to the upside, right? We've got that top line standard deviation. Let's go quickly to the daily and just refresh in terms of where we're at. We've got the 20 moving average acting as that impedance to the upside, right? 20 moving average is the threshold. We're going to be bullish over, bearish under. Typically, if we want to make a strong move to the upside, you guys know that's going to be the litmus test, the barrier. And so the week is getting started. We can pay a bit of attention to the RSI, although with this big drop last week, we'll just say that, it was nice to hit that specific daily. Oversold for how long? Very brief amount of time. We did come down and touch into oversold turf, so that was a nice pickup. Nearly had to be programmed on Bitcoin or anything else you were trading. And in terms of the details, let's look at that RSI on the 4 hourly. Very briefly, you guys know anytime we touch down into, the mantra is, right, 1/3. You got it, 1/3. And I'll bring up a different higher target here to the upside. I'm going to go ahead and caution you, if you trade these a lot, right? If you trade these expansions, we call them bell patterns, right? The specific volatility equation between the bears on resistance, bulls on support, bears on resistance, the bulls on support. We want to get back to those bears on resistance of this top line. It'll continue to be a target, but I want to deduce things, if possible, back into a 1/3 if I can. Why is that? I'm going to tell you, and that 1/3 on the RSI is just very easy to explain. It's impossible to miss if you want to catch it. And what is it? Well, we have 1, 2 on the RSI, relative strength index. We have 3 possibilities. Anytime that we come into contact with oversold, here we go. What can happen? First of all, you guys know we came into contact oversold. The bears could continue to the downside, could continue to sell to the downside. That's option number 1. We agree? Yes. Option number 2 is what? Well, option number 2 is the bulls could engage to a mid-level point, which is where we're at right now. And what could happen? Option number 2 is, well, then the sellers re-engage, bam, and they start and take control again, and the sellers really take over. And guys, we're just back into oversold turf. So that's option number 2, right? So, and that would look like the bounce that we could see now with some give back to the downside. Now, option number 3 is going to be this top line, right? And I always write this 1/3 on here. Why do I do this? Because literally it is 1 out of 3 possibilities as we've gone into oversold turf. Bam, that's the trade you want, all the way up to overbought turf on that 4 hourly. We pay a lot of attention to the 4 hourly, and amidst all the confusion of people involved in swing trades, etc., I remind you, are you trying to catch the swing from oversold to overbought on your RSI, on your asset of choice? If not, you are likely leaving a lot on the table, period. If you're caught up in the range right here in terms of the chart, yes, or the range right here in terms of the chart, well, try and make your range from the oversold to overbought, oversold to overbought, and regard your capital in terms of the risk exposure of this 1, 2, 3, essentially that 1/3 dynamic. Yeah, sellers can continue to sell. Yeah, buyers can provide a brief bounce and then back to oversold turf, or we can get that 1 out of 3 cruise to the upside, which is what we're looking for in this specific situation. Guard your capital, never overexpose at any higher price. Yeah, that's going to be that 1/3, we'll say probability, just in terms of risk measurement, always with heavy cash reserves. This is London with Market Hedge looking for, I want to tell you, if we're going to get aggressive, I'm going to be on the 4-hourly in terms of structurally speaking. Just pay attention to this specific target. You guys tell me if you like it or not. On the 4-hourly, if we're looking at some degree of, and it's going to have the most aggressive descending wedge on the top that we went over yesterday. It's going to blow these lower time frames away in terms of a conservative take, and bam, if we're looking at an aggressive upside target, it's going to be that 123.50 there, about the 123.50 on this specific descending wedge. It's a compressed wedge. It's not very good looking in terms of that wedge formation, but it is an upside target. And in terms of the potential for take and consolidation in the zone, you can kind of look left to this specific area precedingly in here. We've had a lot of resistance in and around this area here. So just pay attention, never overexpose. And again, back to the metric, what was it? The daily 20 moving average. You guys got that right. This is London with Market Hedge. It's been a pleasure to spend a little bit of time with you. And shout out to all of our VIP. We will be in the back trading. Shout out to J Mac. Shout out to Luke. Big Luke, what's up? And Daniel, we want to see some more trades, brother. You caught this short beautifully well. Nice to see that. And for those of you following the trades in the back on Market Hedge, just pay attention. Just pay attention. Regard your own trades and risk. Absolutely, guys. It's your game. One of the riskiest games, which is why we're into the accelerated risk and accelerated returns formula. This is London with Market Hedge. Let's go. See if the bulls can maintain or actually accomplish up and over that 20 moving average on the daily. That's going to be the test and measure as we look towards the rest of this week. Is this line at 116.750? Talk to you guys soon. Take care. Bye-bye.